Hello, familia, and welcome back to Crypto. Oh my God, I'm excited. I kind of got my voice back. I'm sorry about yesterday. I sounded fucking gross, but it stuck with me, and I appreciate that. Now, today, I am very excited. We're talking technology. We're not talking institutional adoption, and we have one of the coolest launches in a very long time, a launch that will help us launch more. Let's get right into it. Bye. Now, as we jump back into crypto history a little bit, there is this guy named Kobe. He comes from the early days of Bitcoin, establishing himself as a vendor on the Silk Road. I think he was probably selling drugs, something like that. Back in those days, the early Bitcoiners that made a lot of money were the people that just accrued a lot of Bitcoin for generally one of two reasons for utility. And that would be to sell drugs on the Silk Road or to buy them, or to gamble and play poker on online poker that used Bitcoin. These are some of the early whales that I encountered in my days, and my God, did they kick my ass in the outperformance level. Now, Kobe stuck around. He really dug the industry, and he's pretty sagacious. He's a wise guy, eh? No, I mean, he's really a wise guy. And he's always been true to the core ethos of decentralization, of accessibility, of expanding the wealth generation capabilities that the internet brings and that crypto on top of the internet puts out. Now, earlier in the year, Kobe took advantage of the MiCA laws out of Europe to launch a new fundraising platform called Echo. Now, Echo is super cool. It opened a lot of accessibility, but it still fell under these limitations. And it's honestly very akin to an angel list for crypto projects. If you're unfamiliar with AngelList, it's coming from the Silicon Valley world. And it was like, hey, you're in Silicon Valley, you made a decent amount of money, your friends are all doing startups. Why can't you easily invest in them? So AngelList took the idea of the SPV, the special purpose vehicle, and it is essentially a group of around 99 investors, and it kind of makes it easier for founders to go out and to raise money. And basically, an SPV is also a way to say, hey, maybe you have a friend that's building a company, you can put together an SPV. So like I could say, hey, dude, I'm going to go raise you $1 million. I don't have $1 million, but I'm going to create an SPV myself, and I'm going to go out and raise that, and I can share the investment with other people in my social group. It's kind of the idea. It's very similar to an investment club, which is also another investment vehicle that just allows like-minded homies to go invest in things. This is the foundation of one of the early venture DAOs that I was in, Metacartel Ventures. We were essentially a Delaware C Corp registered investor group that happened to trade and make their investments on chain. It was a lot of fun, but there's also a lot of obligations. Like you have to issue K1s, you have to do accounting. There's all these things. So anyway, I digress. But Kobe comes out with Echo and launches under the compliant MiCA laws in Europe, a way for investors and projects to bring forth these early stage private round investment opportunities. Now, this is still very venture, if you will, right? These are the private rounds. They're not publicly accessible. They're not huge. They're not bombastic, but there's a lot of limitations when you get into the raising money game. Now, inside of securities land, you have to raise under what are called regulatory exemptions, to be honest. And some of the primary reg exemptions are Reg S and Reg D. Reg S and Reg D, they're very similar. However, Reg S is for non-US citizens. It's a bit more open, and it means you can self-attest to being an accredited investor. Reg D is for Americans, and it is for accredited investors only. This is for issuing private sales of your equity in a capital raising format. Now, one of the crazy things is if you want to issue to Europeans and you want to issue to Americans, you can run a Reg D and a Reg S. But if you cross-pollinate those, like if you go to the Europeans and you advertise the Reg D offering, you're fucking breaking it. If you go the other way, again, the messaging has to be within their own swim lanes. Otherwise, the regulatory exemption breaks down. And these are a pain in the ass. And why is that? Because again, they really function around accredited investors. Again, for Reg S, it's self-accreditation. So maybe you can slip by it a little bit. For Reg D, you have to get either a CPA or you have to prove that you meet this criteria. And accredited investor roles are honestly ridiculous. What is an accredited investor? It's somebody that's allowed to invest in private equity. So when you see all of these websites that are like, if you had invested in SpaceX early on, $1,000 would turn into $1 billion. The reality is you're not permitted to unless you're an accredited investor. And let's just quickly look at the financial criteria. Net worth of over $1 million, excluding primary residence. Like why would you exclude the primary residence? That's like 85% of the average US citizen's net worth is your house. So nuts that you got to be a millionaire, not including your house. income of over 200,000 individually or 300,000 with spouse and partner. Basically, you've got to be in the top like 24% to get into this professional criteria. This is actually brand new. They only added the professional criteria like a year ago, 2 years ago, I can't remember. Basically, I'm not going to read it, but it says like if you work in finance and you actually understand financial assets, you get a pass. Now, what's ridiculous is that they have these crazy milestones, these criteria for investing in real companies, but you can go out and gamble on anything. You can play the lottery and you can lose all your money that way, no problemo. Now, why is this here? I mean, to some degree, I slightly agree with it because without it, anybody can go out and raise money around a company. It could be a Ponzi scheme. It could be bullshit. And this does mean that, people aren't able to fleece the retail investor. They're not allowed to go out and raise money on Ponzi's. However, this also means that they're gatekeeping, and that's pretty problematic. Now, there are other regulatory exemptions. There's Reg A Plus and there's Reg CF, and these do allow for mom and pops and everyone to come in. And a Reg A Plus is pretty cool. It costs a lot of money in legal fees to gear these up, but you can raise $75 million from basically everyone. Not accredited. You can go out and actually scream in Times Square, hey, invest in my company. You cannot do that with Reg D and Reg S. It has to be a pull mechanism, not a push for those two. For Reg A Plus, you can push. And this is big, right? How do you raise money if you can't market? It's very much a conundrum, but these are the things that are embedded in securities law. Now, Reg CF, very new. It comes from the Obama era in 2012, right alongside the ICO, kind of ironically. And it basically says there's about 10 Reg CF licenses out there. I didn't check that number, but it's limited and it's few, and it's platforms like Republic, like CrowdSeed or WeFunder or all those things. And it's smaller companies that basically say, hey, you can invest anywhere from like $50 to $5,000, right? It limits the amount of money that a Reg CF investor can actually put in. It's basically some portion of their income so that they can't like blow their whole load on these early stage businesses. Remember, like 90% of early stage businesses don't take off. But the idea was to open up access that used to be for accredited investors. Now, the problem with a CF is that it's very hard. It takes a lot of work. And if you're already raising a ton of money from, again, accrediteds, from qualified purchasers, which sit above, from institutions, you could just take the whole raise from one really good partner. And it turns out that the people that have a lot of money also have a lot of connections. So that's why they're called smart money. You're going to want to probably go and get that smart money because they can open doors, they can expand your network, they can help you grow that business. Crowdfunding really can't. You're just going to have a whole cater of people that, if it doesn't work out, they might be salty. And the real reason to do it is if you're virtuous. Let's say you want your employees to have greater access to the equity than you can provide. You could open crowdfunding, or you just say, hey, we want our community to participate. But in order to do that, you're going to take on these onerous step to launch a campaign, to figure out how to market it. And, the idea is if it doesn't fill the full raise, it doesn't really look good. You want to sell out on a raise. That shows demand. It's part of marketing. It's all embedded. So anyway, this is why the ICOs stopped, because Gary Gensler came in and the SEC got more aggressive after the ICO era. Truth be told, ICOs work so phenomenally well because they just appeared out of nowhere and they took everyone by surprise. In the ICO era, you had these token-based companies basically saying, give us some ETH and you will get our token back. Now, nobody knew what these were. And over time, people got a little bit more under scrutiny by the SEC. Of course, you have Gary Gensler that said, I think they're all securities, though he wouldn't tell you why. And that meant if you wanted to do an ICO, you might be violating securities laws. And what we saw time and time again under the Gensler regime was that they would just simply sue you into oblivion. In fact, about 3 of these companies in the early ICO era did a Reg CF. And what happened was that the Gensler regime, after their raise, very cute companies, very novel, that were like actually kind of good altruistic ideas, but they got sued into bankruptcy because the SEC came after them and wanted to defend that. Are you a security? Are you not a security? And the legal fees just amounted to the end of the business. They actually closed their businesses. So by going under the CF platform, people actually committed suicide, which is to say, I want to go in the compliant path, and that ultimately killed them. It was a ridiculous story, and it's part of the reason why the SEC under the Biden admin, under Warren, was so vicious and so disgusting. And of course, this is my setup for the villain and the big reveal, which comes back to Kobe and Echo. And basically he came out, and if you read this post, he's saying we created Echo with the goal of inclusion and all that jazz. But what people really wanted wasn't these little groups of private sales. They wanted public sales. And that is what we are getting with Sonar. Now, public sales fall under that regulatory scrutiny. All the Reg D, the Reg S, the Reg A+, the Reg CF, those are really facing publicly oriented offerings, securities offerings. Echo got by doing private round offerings in the SPV format. Now, this does hit a scale. When you have enough money under management, assets under management, you have to become what's called a registered investment advisor, an RIA. That steps up the scrutiny even more. It makes the whole SPV model a little tough at scale. And of course, while that was cool for selling to, insider whales, dudes who have groups of homies that have money, crypto companies were like, we really want to do the public sale. We want to go out there. We want to get a little more risk on, right? We're now under the Trump admin. We have a lot more leniency in how you can raise capital. And they came out with this game changer called Sonar. What Sonar is basically all the tools to do a public sale or an ICO. And they're stepping back and they're saying, hey, look, this is not going to be on Echo. These are the tools for you to take and to run your own token sale. If you want to do this, if you want to take on further risk, go for it. All this platform is the tool sets to receive money, to distribute the money, to do it across Ethereum, to do it across Solana, to offer things like geo-fencing, right? To say, hey, if you don't want the Americans, you don't have to have the Americans. If you want the Americans, cool, let them in. And basically saying that this is going to be a loosey-goosey toolkit that any crypto company can use to launch their own sale. The sales will be on their own homepage. If you read this full thing, they basically said at some point, the Sonar team hopes that they won't even know about all the sales happening on Sonar. They're just going to be kind of white labeled, as we would say, right? The tech is going to be embedded in these other companies' websites. So this is really cool because this is really opening up the doors for the explosion of opportunity to retail. This is what made Ethereum great in 2017. People like me who were not accredited investors were able to get into these wealth generating opportunities. It was an amazing time. It was extremely exciting. And this was where you got to play that VC game, right? We're seeing every token now that is VC funded is hitting the markets at really high valuations. That's why you're seeing the tokens go down at launch. They're too expensive because the private money that went out there and took capital from the Saudis, from Singaporeans, from other rich people around the world, they all bought up the private rounds at the good opportunities, the good valuations. This is saying, hey, you don't have to be a venture capital. Just like the ICO era of 2017, a normie can get into these early stage valuations. And this is kind of the game-changing capability of blockchain. This is the great equalizer that allows people to generate wealth without having a lot of it already. And maybe you don't have amazing connections, but part of the tool set here is they can reward people that are diligent inside their discords, that are active participants in their community. And this is to say, hey, maybe you don't have the money, maybe you don't work in finance, but if you are here and you care and you put in the effort, there is going to be a path for you to profit, to get wealthy off of this. And the great companies of 2017, they gave the upside opportunity to their community. Of course, there's plenty of downside. There always is in investing, but that upside has been captured and limited by the upper class forever. And this is so exciting because it's not necessarily entirely compliant. It's got all the rules to do compliance, but they're stepping back and they're saying, hey, that's going to be on you. That's a risk profile that you can choose, and we give you everything that you need to do it. So I highly recommend you dive in and read this announcement. It's like super short. You can see me scrolling here, but this is one of the single most exciting things that we've seen in a long time. And of course, they're launching with a really robust company. It's called Plasma, and it's a major robust infrastructure piece for stablecoins. We're seeing stablecoins be the primary adoption vehicle of this cycle. So this could be the next great financial rail that replaces everything that is currently in place, like Swift, for example, and will move money around the world, et cetera, et cetera. Either way, they're giving you the opportunity to get in. It's at a $500 million valuation. That's pretty expensive, but other stablecoin issuers and other infrastructure plays, they go to multi-billions. So are you going to double your money, triple it? Are you going to 1,000x? I don't know, but the chances are pretty high that you will get something out of this. that you're not going to completely lose out. And this is cool because it's a great team. And if you want to look at this is a whole nother thing, Plasma. I'll give you the link in the sources. But the signal here is that we are returning to the ethos of our roots of accessibility. And while we see Wall Street capture all of the Bitcoins, all of the high-level SPACs, the things I've been talking about for the past few weeks, this is about us. This is about the people. This is about access. And it's a truly exciting time. So guys, like, I can't tell you how pumped I was to see this. If you blend this with that MetaLex style product that I discussed on how to raise money with on-chain tools, right? To accept every dollar from stablecoins, lock those into smart contracts, and guarantee that investors are actually distributed their investable assets via guaranteed code. This is very big. We moved away from that a lot. And we often see founders altering their vesting schedules, adjusting things as their token supply kind of goes out of control. And this is not good for the investors. That means that they're just coiling the sell side pressure. Now here, plus everything MetaLex is doing, we are going back to that cypherpunk roots that is about accessibility, that is about open opportunity for everybody. And again, one of the things that drew me to blockchain was that we could have these protocols that don't give a shit if you're black. They don't give a shit if you're a man or a woman or any of those social identifiers that actually impact people's financial status. They just care. Do you have the capital? Do you have the will? Do you have the desire to participate in the communities? Do you want to contribute to the marketing? And what's better marketing than community virality, right? That organic growth is the best thing that any project could ever ask for. So this Sonar play is truly exciting. It's unlocking the capability to do what we've seen in the past, which is generate wealth for those without opportunity. And now that stablecoins have proliferated the world, I mean, there's no reason why somebody in Africa that runs their entire finance from their cell phone can't invest in one of the next great ICOs. And this is awesome. This is why we built it. And I'm so tired of all the news talking about crypto investor, kidnap somebody, tortures them for 3 days. Like, what does that even mean? They bought like a Dogecoin or something? Like that is what we're seeing all over the news. And now we have the financial markets being democratized in the truest way possible. And it is so, so exciting. So hopefully I got a little bit of that juice into you. I'm trying to be contagious as hell, just not with my cold, but with my vibes. And as always, good luck out there. I hope that this does usher in a new era of, again, equality, equity, and just access, because it is why I was here. And it is becoming so hard to look at this industry and think you guys are actually on the right path because it has been so captured by the wealth. These are exciting moments, and thank you to Kobe. Thank you for the Sonar team. Thank you to Echo for launching it, and thank you to every founder that chooses to give that opportunity to their community. As always, guys, stay safe out there. Good luck. Cynthia Loomis at the Vegas conference said that there might be an announcement about a Bitcoin reserve next week, so who knows what's about to come. I will keep following the news, keep you updated, and as always, thank you so much for tuning in, and if you could give me a sub, I generally appreciate it from my heart, because like nothing but love for all y'all that watch this. Thank you. Good night. See you tomorrow.